One that I like that has an interesting, let's say, it's an interesting play in the environment that we didn't discuss is Amazon. If I would have to pick from the four, I would pick Amazon because the market cap is 1 trillion now. And keep in mind, Apple has 2.5 trillion. Amazon is not focused on making profits, but they are investing 60 billion per year into their infrastructure. And nobody is doing that. Everybody, Facebook is investing in the metaverse, Google is investing in this or that, but only Amazon. Nobody wants to compete with Amazon on that infrastructure, Amazon Web Services, etc., etc. One day, Amazon Web Services was down for a morning, and also my research platform was down because we are using, I didn't even know that we are using Amazon Web Services, etc., etc. And then I'm thinking, from an investing perspective, if you open a position now with Amazon and you say, okay, if it goes 30% down, you buy again, I'm thinking, what's the likelihood that Amazon trades for a longer time at 600, 700 billion? That is very, very unlikely because they are building a moat into their retail, into that everything that it will be very, very hard to take away because for Google, it's search. You find the tech engine that works better, ChatGPT and Microsoft, and this business erodes. For Amazon, it is logistics, delivery, clicks, Amazon Prime. It's an infrastructure that takes decades to build. Yeah. And then I'm thinking, it's very, very unlikely that Amazon will trade for longer at below 1 trillion in market cap. So you can say, okay, from a portfolio perspective, I can start a position now, medium position. If it goes lower, I can increase it. And then it's very likely when the market turns, it will be back to where it was. You can take your profits on your lower buy and then just let it run because it has its cycles to the stock, and then you can simply let it run when the market gets exciting again. So from the four, I would pick a fifth, which is an investing strategy trading on Amazon, if I have to pick from these tech businesses.
Yeah, right. Yeah, that's a lot of money, 60 billion into infrastructure. So is that the infrastructure for the web services mainly, or is that
everything?
All of their businesses?
They are spending on capital investments 60 billion a year. Apple is spending 70 billion a year on buybacks. Of course, the stock goes to the moon. Amazon doesn't care about their stock price and buybacks and profitability. They are just building that infrastructure. 60 billion. That would be a 6% dividend yield if they wouldn't spend that money.
Yeah, the dividend investors would go crazy at that.
Yeah, and Amazon would be a 3 trillion company if they would have a 6% dividend yield.